is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. Today's edition of Back Roads of Illinois. We were bringing you lasted farming sources and information sponsored by AgriGold. We were glad you're here on today on Back Roads of Illinois. We were talking about the renewable energy with Tad Hepner from the Renewable Energy Association. Then I'm joining with Matthew Kruse from Comstock Investment on the commodities markets, especially in the technical on the cattle markets with Matthew. This is your rural news sponsored by AgriGold. We are watching the reconciliation bill for the agricultural in Washington, which, by the Republicans, block it for this reconciliation bill for the SNAP program and other things in the bill. Illinois has passed the bill for help with combating the deer to eat in their field. So the bill was passed by the state legislature. It's reported by the Illinois Farm Bureau. Finally, Hayworth High School award-winning at the Agricultural, Vocational, and Educational Purposes by the Illinois FFA Association an Illinois case. Hayworth in Central Illinois in McLean County. This is your rural news sponsored by AgriGold. This is your commodities markets for this afternoon sponsored by Kyle Bumstead from Allendale Inc. July corn is up at 3 to 6 cents. September corn is up at 3 to 5 cents. July beans are up at 5 to 9 cents. August beans are up at 6 to 8 cents. Kansas City wheat is up for today. KC July wheat is up at 4 to 8 cents. KC September wheat is up at 3 to 6 cents. Chicago July wheat is up at 5 to 4 cents. Chicago September wheat is up at 3 to 4 cents. June cattle is up at 3 to 6 cents. August cattle is up at 5 to 10 cents. July feeder cattle is up at 5 to 10 cents. August feeder is up at 9 to 4 cents. June hogs is up at 5 to 10 cents. August hogs is up at 4 to 8 cents. This been your commodities market. We were talking about the renewable energy with Tad Hepner from the Renewable Energy Association. Tad, how are you?
I'm well. I'm well, thank you. Thanks for taking the time today. This is going to be fun.
Let's discuss about the RVO in Washington, D.C. Could you tell us about that?
Yeah, certainly can. So the RVOs are renewable volume obligations that are a part of the RFS, and they are set and adjusted kind of annually based on petroleum production as well as the capacity of the biofuels produced in the United States. And so they kind of like to adjust those and of course set those so that we can blend biofuels into the petroleum supply.
Can you explain to our audience that what's the RVO a little bit?
Yeah, certainly. So we like to set the RVOs, or we like to make suggestions to the EPA before they put out kind of their final numbers. And this year we've put out no less than 15 billion gallons of ethanol. And then there's another bucket that's a kind of an interesting bucket to talk about as well. It's a 5.25 billion gallons of biomass-based diesel. And so together, those two things end up being about 25 billion RINs. Now, if you're interested about that math, that 5.25 carries a 1.7 multiplier because of the BTU value of diesel, which is a little bit greater than gasoline. And so there's kind of where we get the RIN numbers as well as the gallon numbers with regards to the RVOs, and then of course the RIN count that goes along with that.
Dad, how much of summer blend for every year?
Oh, that's an interesting question. It depends on a lot of factors. Petroleum production, gasoline consumption. If you kind of average, what we use as far as kind of billions of gallons, every month in the United States, we get really big numbers, right? So it's about, maybe 10 to 12 billion gallons a month of gasoline is used, and of course 10% of that is ethanol as well. And so I'll kind of break those numbers down. So with summer blend from May 1st to about September 15th, those are kind of the federally mandated span for summer blend gasoline. Some states are longer because they don't have the colder weather, and so they kind of edge into that a little bit sooner. But for the most part, if you take those months, those 4 months, so let's see here, May, June, July, August, September 15th-ish, so that's about 4 months. You end up with about 45 billion gallons of summer blend that's essentially produced for that summer driving season. And of that, of course, 10% of that is ethanol. It's actually kind of edging up as we see things like E15 and E85 penetrate in certain areas. So the actual kind of blend rate annually is 10.4 of ethanol to gasoline. And so that, in a nutshell, that's kind of how the summer blend kind of process works. Is there's a kind of federally mandated span of time where that summer blend is sold. And of course, there's some kind of turnover at the refineries to change over from winter to summer blend. But for the most part, you're looking at billions of gallons of summer blend produced every year.
What is your thoughts on the E15 for every year round?
Yeah, that's a great question. That's a great question. We view, kind of E15 as an opportunity to, during the summer season, people are driving more, they're going on vacations, and also that gasoline is a little bit more expensive to produce, right? So, well, when you put E10, or of course, for our purposes E15, you can save a little bit of money at the pump. So at my gas station that's just a couple blocks down the road, you could save 20 cents a gallon by filling up with E15. And so for those folks that are looking to travel and looking to save a few bucks at the pump, which adds up over the entire driving season, E15 is a great option, and it can kind of reduce your overall fuel costs for the family.
What's next for your top priority for R? FA?
Yeah. So that's a good question as well. Again, this RVO, we got to make sure that we set these RVOs kind of in the correct area so that it allows for ethanol producers to produce more fuel, as well as kind of support agriculture and farming, right? So it keeps those prices for corn commodities kind of in a stable area, ensuring that obviously farmers can be successful. Folks, can obviously save money at the pump. And then, there's a couple other things as well. So we talk a lot about the Inflation Reduction Act, and with the new administration, they're looking to kind of put their fingerprint on that as well. And so we got to make sure that what comes out of these discussions is one of the things is 45Z. Now, if you're not familiar, if the audience isn't familiar, 45Z is something that was kind of born in the Inflation Reduction Act that allows climate smart ag practices and some incentive to produce lower carbon intensity fuel. So we got to make sure we get a good representation for our industry and make sure we're set up for success, going forward on that. So I would say a couple of things. Obviously RVOs, 45Z, and then the last thing that I'll maybe talk about is that there's a number of opportunities for our ethanol producers to produce something we call corn kernel fiber. So that is essentially cellulosic ethanol that's derived from like the fiber portion of the corn. And there used to be a second gen producer tax credit that expired at the end of 2024. It's expired a number of times, but it's kind of been renewed as well. And so we're looking to get that reestablished as well to obviously set up our ethanol producers for success and also contribute to that cellulosic ethanol portion, that D3 RIN portion of the ethanol production with that low CI, renewable ethanol.
Are you watching about alcohol jet for right now with the credits?
Yes, that is an opportunity for the ethanol industry. That SAF Grand Challenge was a major announcement, in our industry. And the way it's set up is that you can take, ethanol that's produced at an ethanol plant, and you can either co-locate or send it to another facility. And what they'll be able to do is through the addition of hydrogen as well as kind of some catalyst technology, they're actually able to take that ethanol and produce sustainable or synthetic aviation fuel for use in the airline industry. It's a very large opportunity for the ethanol industry, and we definitely think we can compete, as well as provide a stable and low cost, low CI feedstock for the production of that aviation fuel.
Do you have any final thoughts about the summer blend for this year?
No, just I'd like to reiterate that you can obviously use E15 in your vehicles, anything from 2001 and newer. It's a great way to save a few dollars at the pump, as well as support your local and regional agricultural economy, as well as the production of renewable fuels.
Thanks, Tad. This
No
is
problem.
Matt Hepner from the Renewable Energy Association.
Thank you, Caesar. I appreciate your time.
And the trade with the livestock markets with Matthew Kruse from Comstock Investment in West Des Moines, Iowa. Matthew, how are you today?
I'm good. How are you doing?
I'm good, thanks. Matthew, let's discuss about the grains markets with these prices. What is your thoughts on this markets?
Well, we've been kind of trading lower up until the last couple of months here as the market's digesting that we're looking at planting a potential record corn crop anyway. Um, we're at 95.3 million acres. Some people still think that we can expand acres even further, maybe get up to 96 million acres. And you combine that with record yield, what USDA has us pegged at 181 bushels per acre, and it creates for quite a bit of supply. We've had some good luck here, kind of eating through the old crop stocks, which is really what's kind of been helping this market keep its head above water, kind of treading water here. But we got a little bit of a jump here right now. We're up 6.5 cents right now. Right now we're just kind of mostly focused on the spring planting weather and getting this crop in on time. We've been, it's no secret that the crop is going in pretty fast. The Monday planting progress reports had corn planted. 78% of the U.S. crop was planted, and that's about 5% above the historical average. So, but it's even faster in the case of soybeans, where they're at 66% here over the weekend. Um, and that, boy, that's about 13% above the 5-year pace. And so crop is going in fast. It's probably going to slow down a little bit this week as we're finally getting some good rains, which, um, I know some people probably were just finally getting dried out enough. I know in the southern part of Illinois it was pretty wet, but boy, in large parts of Iowa and western Corn Belt it was pretty dry, and so we're glad we're getting the rain. So it's finally coming. We got an inch yesterday. I think we'll get a little bit more in the overnight for weather. So but looking out to next week, there's looks like it's going to dry out again, and so I think by next week those that aren't done should get things wrapped up here by the end of May.
How is the fundamentals on the beans markets today as we speak?
Well, demand is still strong, and when you look at the crushings, and so domestically, we're still, burning up the old crop. I think the big outlier for me is the exports. Obviously, our bean export market is highly dependent on what we're able to export and foreign buyers. And when we have a lot of these tariffs enacted right now, that kind of throws a wrench into the situation. And, we'd like to see some sort of resolution with these tariffs sooner rather than later, just because it's going to make our products, I think, more uncompetitive on the global market. And ideally, get some sort of trade deal done with China, or at the very least, kind of enforce the phase one trade agreement back from the first Trump presidency. And so, yeah, that's kind of where it's at right now. On the fundamentals, I mean, we increased our corn acres, we reduced our bean acres. So, it still stands to reason that if we, increase our corn acres a little bit more, maybe we'll shave off a little bit more from the bean acres, which could kind of help support the market. But I'm not very friendly to the corn market right now, but a little bit more positive on the beans just because our ending stock outlook that the USDA has us pegged at 280 million bushels for new crop ending stocks. That's actually the lowest that we've seen in the last few years. And so, but again, that can change easily, right? If we lose this export market that we've built up over the last couple decades and blow that up, you can easily tack on 200 million bushels to the ending stocks. And so it can swing the other way real quickly if we don't get some solution to that. But I feel like the market is giving um, those negotiations kind of the benefit of the doubt and still kind of hoping they'll get something worked out. But it'll have to happen here eventually. They've paused those for 90 days and I think I don't know what the exact date is, but they probably got another 45, 50 days left to be able to work something out or extend those tariffs further.
How about the technical buying? Could you tell us about that a little bit, Matthew?
Well, I don't have the numbers in front of me, but I think the market has been shifting to increasing their short positions, and that's I think been weighing on the market as well. And so the market is net short both in the corn and the beans. I think they were attributing the move up today just because of short covering, because a lot of those short sellers were taking profits and exiting those positions, and that's really the reason for that, which we'll take it, but it's not when it usually happens like that, it's not really a sustaining move in the long term. And so, but I think that's potentially one of the reasons that you're seeing the market up today.
How is the beans planting progress in Iowa and northwest Iowa?
Uh, well, I don't know if you believe it or not, on my farm in Northwest Iowa, I got done very early. Got our beans in April 24th, I believe, which is,
Their cattle for right now?
the feed market continues to amaze. We every time we get a little dip, um, it just turns out to be another buying opportunity. And so, you know, it, we keep looking for some sort of signal to tell us that, the this basically 5-year bull rally that we've had is over, and we haven't seen it yet. Um, Looking at some of the technical charts, you're going to have to fall quite a ways before you really do some significant chart damage at this point. And so, um, if I'm going to pull up the live chart here, live cattle chart, for June. I mean, you got to break below 192 before you can really say, okay, we did some major chart damage. And, we're, um, over 20 points away from that right now. So it's a long ways away. But, we're cash cattle continue to trade firmly. Um, it's just been able to shrug off any bad news up until this point, and a lot of it's just due to demand has been strong. And eventually, all good things must come to an end, though. It's just no one can tell you when that's going to be, if that's later this year or next year, when that's going to happen. Um, but so that's kind of the state of the cattle market right now.
How is the July feeder? We saw 300 for last week, Matthew.
Uh, let's see. Yeah, you've seen trade above 300, and here I'm looking at the August feeders right now are at 297 and a half, and um yeah, it traded, let's see, at a high of 307 just last week. And we had a little bit of a correction here. Um but it's no reason to think at this point why we can't still keep moving higher. But we're getting into summer, getting into grilling season, and demand usually picks up. And so, um, I think you're going to need some sort of black swan event really to change the overall direction of this market, which has had a multi-year bull run and has been very impressive. But um, we kind of sound like we keep crying wolf at this point because market keeps higher and we want to take some profits, and but eventually it keeps moving even higher after that. So
Sure. What is your final thoughts about the fundamentals with the trade in the grains?
well, I just encourage people, to kind of look at their bottom line and their cost of production, and if we get this crop in on time, and it looks like we are, and weather is favorable, there's no reason to believe that we're not going to produce another record crop. But if we do that, um, we are looking at higher ending stocks compared to last year, maybe 400 million more. And I think that's going to kind of put a damper on the market. I think if you're maybe looking for any potential rallies, we're kind of setting ourselves up, I feel like, same as last year, where the market's going to kind of drift sideways to lower here going into the growing season, unless we can get some sort of weather scare to kind of, jerk this market out of what it's plateau here. Um, and Yeah, and so we're advising producers kind of look at advise buying puts putting protection on, getting their hedging in place, at least just establish some sort of floor. You know, we are of the opinion that, you know, it's not unforeseeable that we could still go down and see $4 corn before we see $5 corn again. You know, that's unfortunately kind of where we're at right now. But again, I mean, if there's a major weather event, that can all change. But I think the big outlier, in my opinion, are these tariffs in our export market. Um, we've kept our head above water because our exports have been so strong. If it wasn't for that, we'd be a lot lower than we're at now. And we need a tariff deal done, especially with China. It'd be great. And if that doesn't happen, I think our exports are going to suffer and prices will suffer. So that's kind of where we're at right now.
Where people can find you for your consulting services for their grain and livestock.
Yeah, just go to commstock.com, commstock.com, or call 712-227-1110.
Thanks, Matthew.
Thank you, sir.
This is Matthew Kruse from Comstock Investment on the Markets Club podcast. Thanks to Ted Hepner from the Renewable Energy Association and Matthew Kruse from Comstock Investment. This has been Back Roads of Illinois. I am Cesar Delgado. You have a good day.